Thank you, Claudia. This is Judge Andrew Quee. And just a brief heads up for those of you joining us from California, you're probably aware that we're under a state of emergency due to wildfires. So that might put us at an elevated risk for a power outage during today's hearings. If you do experience a power loss during the hearing, we might have to postpone the oral hearing. So if you lose power or if you're disconnected and unable to reconnect, please contact Claudia Lopez to find out what is happening and what is going to happen with this hearing. With that said, I'd like to welcome everyone to the Office of Tax Appeals. Today's proceedings will be live streamed and a certified shorthand reporter is going to transcribe everything that is said today. That transcript is going to be part of the public record and it will be posted on our website. In response to the COVID-19, the Office of Tax Appeals is conducting today's hearing electronically with the agreement of the parties. Because this hearing is being conducted electronically, I'd like to offer just a couple of reminders to help the process run as smoothly as possible today. So first, please remember to say your name before you speak. This is especially important because some participants might only have an audio connection. For the same reason, we ask that you do not use the chat feature in Webex. Also, please mute your microphone if you're not speaking. This will help to avoid background noise and feedback. Also, just a reminder, if your mic is muted, you can temporarily unmute it by pushing and holding the space bar on your laptop or computer. Finally, a reminder that these proceedings are being broadcast live, and any information that you show on your screen, such as an exhibit, will be publicly viewable. With that said, I believe we're ready to go on the record. I just checked with our reporter. Lynn, are you ready to go on? Great. Okay, we're going to go on the record now. We're opening the record in the appeal of Displayit, Inc. This matter is being held before the Office of Tax Appeals. The OTA case number is 1808-3582, and today's date is Thursday, August 20th, 2020. The time is approximately 10:07 a.m. and this hearing was noticed for Cerritos, California, and is being conducted electronically with the agreement of the parties. Today's panel will be heard by a panel of three. Today's hearing will be heard by a panel of 3 administrative law judges. Myself, Andrew Quee, I will be the lead administrative law judge. Also, Judge Josh Aldrich and Keith Long will be the other members of this panel. All 3 judges will meet after the hearing and produce a written decision as equal participants. Although the lead judge, myself, will conduct the hearing, any judge on this panel may ask questions or otherwise participate in order to ensure that we have all the information necessary to decide this appeal. At this point, I'm going to ask the parties to please state their names and who they represent, starting with the representatives for the taxpayer.
I'll jump in first. Michael Cataldo, Cataldo Tax Law, representing Appellant Displayit.
Javier Ramirez with Singer Lewack, representing the appellant Displayit.
Glenn Kwan, working for Singer Lewack, also representing Displayit.
Okay, thank you. And for CDTFA, would the representatives please identify themselves for the record?
Good morning, Judge Quee. This is Mary Flor Jimenez, representing the CDTFA.
This is Jason Parker, also with the CDTFA.
Good morning. This is Christopher Brooks, Tax Counsel for CDTFA.
Great, thank you. So I'm just going to go over, I know we already had a pre-hearing conference, and I'm just going to go over the details of witnesses and evidence just to make sure everyone is on the same page. So to summarize, I understand there's no witness testimony today. The presentations will consist entirely of oral arguments. On exhibits, CDTFA has exhibits A through J. These exhibits were attached to the minutes and orders that were sent out after our pre-hearing conference, and the appellant has no objections to those exhibits. For appellant has exhibits numbered 1 through 8. Those were also attached to the minutes and orders, and CDTFA has no objections to appellant's exhibits. In addition, after our conference, CDTFA appellant submitted a statement under penalty of perjury requesting interest relief. That's the new document, which I'm marking for identification as Exhibit 9. CDTFA, do you have a copy of the interest relief statement?
Judge Creed, this is Mary Flor Jimenez. We do have a copy.
And does CDTFA have any objection to admitting Exhibit 9, the interest abatement relief statement, as evidence?
We have no objection.
Okay, and for CDTFA, was the summary that I just provided regarding the exhibits and the witnesses correct?
That is correct.
Thank you. And for the appellant's representative, is the summary that I just provided correct?
Yes, it's correct.
Great, thank you. So the exhibits that were attached to the minutes and orders, in addition to Taxpayer Exhibit 9, are now admitted into evidence. With that said, I believe we are ready to go over the issues that are going to be heard today, and there are 2 issues. Just to quickly summarize, one is whether adjustments are warranted to the liability as determined by CDTFA. And on that aspect, there are 3 audit items which are being disputed. Sales over $25,000 to everyone but Sprint, sales over $25,000 to Sprint, and tax paid purchases resold, a deduction for tax paid purchases resold. The second issue is whether there is a basis for interest relief. Does either party have any, or do both parties agree that it is a correct summary of the issues for CDTFA?
Judge Creed, this is Mary Flor Jimenez, no issues.
Okay, and for appellant, is that also your understanding of the issues?
This is Michael Cataldo. Yes, we have a complete understanding of the issues as you've stated.
Great, thank you. And I'll just briefly summarize the process of today's hearing. We're going to start with an opening presentation for appellant. Appellant has agreed to 60 minutes for their opening presentation. After that, CDTFA will be able to make their opening presentation. They have 20 minutes for their opening presentation. Either party may maybe ask questions by the panel, and after questioning is concluded, we'll give each party 5 minutes for any closing remarks they wish to make. Does either party have a question about that, or have any other questions that they would like to ask before we start with the opening presentations? CDTFA, do you have any questions or concerns before we start opening presentations?
Judge Creed, this is Mary Flor Jimenez, no questions.
Okay, appellant, are you ready to proceed with opening presentations too then?
We are prepared. Yes, we have no other questions.
Okay, thank you, Mr. Cataldo. You may proceed with your opening presentation. You have 60 minutes.
Thank you. So the client's Displayit, the appellant in this matter, is very pleased to finally be able to be here in front of a body to contest what has been a very long process with respondent in its audit. As you know from our briefs, the audit has gone on for over 10 years. Appellant has provided substantially the same information for years and years, and yet has not been able to get to this point until now. And the main issue that we believe was causing this is one of the primary issues in this case is the Sprint case that you had mentioned. It's our belief that we have clear evidence that Sprint was subject to use tax on the sales at issue. They stated as such, and it seems that the department is sort of taking 2 sides of the same fence, if you will, in that they have asserted and are collecting use tax from Sprint, and at the same time seeking to collect tax here from appellant. And that just seems inappropriate to be seeking to collect a tax on a single transaction twice. And that was really the cause of, in our view, why this has taken so long. All of the other issues in this audit have been developed completely for years and years, and there hasn't been any additional information or documentation. This case has been dragging on for this long, really just because of what's going on with Sprint's audit. And Sprint has stated and provided appellants with documentation to say they've paid it. Appellant has provided respondents with significant amount of information on the Sprint issue. That Sprint was subject to use tax and did pay tax. The level of information that appellant provided on this issue to the department really is above and beyond what could possibly be expected of a taxpayer. And yet they continue to maintain for years and years that somehow Displayit should also be subject to sales tax on the exact same transactions. Now I'm going to go into a few of the issues. Judge Cui, you kind of laid them out, but I'm going to break them up a little bit into a little bit more detail. So we have the first issue that you noted was the disallowed exempt sales over 25,000 on an actual basis. This is the non-Sprint issue. And within that, we have two scenarios that we need to address. One is the sales to ESC, wherein appellant provided the department with a XYZ letter from ESC showing that ESC resold those items. The second issue, sort of a sub-issue of this issue one, is with respect to certain trade show booth sales that appellants sold and delivered into Las Vegas. And the respondent has insisted that these are subject to tax and that Displayit is required to pay tax on these. Then so that's the first issue. So there's sort of two issues, sub-issues within it. Then we have the Sprint issue, which I just laid out briefly before you, the issue that we believe has caused this long delay. Then the third issue is regarding the tax paid purchases resold credit. And then finally, as you noted, the interest abatement. So with that, I will dive right into the presentation. So appellant Displayit is a designer and manufacturer of trade show booths. And so they essentially help set up and create booths for their customers and display counters and whatnot. And that issue in this case is the taxation of the sales that appellant has made to certain of its customers. And I'd like to start off by just kind of noting what the burden is in this case. We don't feel that respondent has met its very first initial burden to explain the basis of its determination. And it must have some evidence sufficient to support its determination and that it's reasonable. And we don't believe that they have done so in this case. And even if whatever its arguments have been made would be sufficient to meet that initial burden, we believe that we have established, based on the documents and evidence in the case, that more likely than not, Displayit's positions are correct. ESC's sales, as our position, were exempt sales for resale. Appellant provided an executed XYZ letter from ES3, pardon me, verifying that the sales at issue were indeed sales for resale. Not only did they provide the XYZ letter, but the CFO of ESC submitted a letter explaining indeed that was the case. Not only did they submit this letter, but they also provided a multi-jurisdictional resale certificate from Toyota, just to show that they, that is ESC, ES3, supplied, resold these items to Toyota. Now what ESC does is they assist, and in this case assisted Toyota with training its sales associates about new cars. and how to go about marketing those things. In connection with its work for Toyota in doing so, it engaged Appellant to assist in providing with displays. These displays were provided by Appellant to ESC, sold to ESC, and ESC sold those displays to Toyota. This is what the documents in the case say. Respondent has not offered any evidence to contradict this. They simply assert, without support or any evidence, that these sales were just taxable retail sales, simply because, and I quote, it's highly unlikely that the ES3 sold these items to Toyota because they were large, and that ES3 allegedly did not have a California sales permit. So the fact that these things may be large it's all relative. What is the size, for one? And secondly, I don't think it has any bearing whatsoever on whether the items were sold or resold. So that's not even evidence. The fact that ES3 did not have a California sales permit really has no bearing whatsoever on the issue in this case. In this case, the question is whether it was a sale for resale. And did ES3 sell to Toyota? And the documents show that they did. Now, should ESC have had a seller's permit in California? Maybe, maybe not, but that's not an issue in this case. Accordingly, the appellant believes that the documentation that it's provided is sufficient to establish that the sales to ESC were non-taxable sales for resale. The second sub-issue in issue 1 concerns the sale of trade show booths. Appellant sold and delivered a trade show booth to one of its clients, and it was delivered in Las Vegas, Nevada. The transaction is not taxable by California because it was delivered to Nevada. It's a pretty simple issue, but yet respondent maintains that it is taxable by California, because appellant did not prove that the customer did not bring the trade show booth back to California, or to California at all, for that matter, after the Las Vegas convention, which is where it was delivered and what was its purpose was for, and for where it was used. The property in question was delivered to appellant's customer in Nevada and used by that customer at a trade show in Nevada. California does not have a right to tax this transaction. Its suggestion that we are somehow supposed to be able to prove what the customer did with the property within the next 90 days in order to establish that it's not taxable, it's not supported by law, nor is it practical. Every sale that's made outside of California, if it's made to someone who happens to have an office location in California, is that going to be subject to California tax if the seller doesn't track the use of that thing for 3 months? I don't think so. That's not what the law provides. So our position again is that these were not subject to California tax. They were delivered outside of California and therefore not taxable. I'm going to move on to the second issue, the disallowed exempt sales to Sprint over $25,000. I have mentioned what the basis of this issue is earlier, and I'm going to provide a little bit more detail as to our argument. It's appellant's contention that it should not be taxed on the sales to Sprint because respondent audited Sprint for the same period and assessed use tax on a projection basis, capturing any tax that was not properly reported. There was very little doubt, no doubt, that this was actually subject to an audit. The actual sales at issue in this case were subject to audit by Sprint, their use tax audit. We provided an XYZ letter from Sprint verifying that it accrued use tax. There's one piece of evidence. Appellant provided use tax accrual work papers showing that transactions at issue were subject to tax by respondent in the Sprint audit, and that Sprint actually paid use tax on the same transaction. We can't have double taxation. You can't tax one transaction to two people. Appellant also provided copies of use tax returns filed by Sprint showing that they actually paid use tax on the same transaction. Now, what does respondent have in reply to this? It has nothing in reply to this. We have substantial evidence to show that Sprint paid use tax on it. Appellant has simply claimed that it has some secret information that it can't reveal that shows that's not the case. But that's not evidence, and it should be disregarded by this panel. And as a result, it should essentially be waived. This issue is waived if that's the only thing that they brought up was we have some information we can't tell you, but you're wrong. That's not evidence. There's no evidence whatsoever that respondent has provided on this issue to suggest that appellant should be paying tax on items for which Sprint has already paid use tax. I'm going to move on to the third issue, the disallowed claimed tax paid purchases resold credit. So the issue here is, so normally appellant during its operating its business, it has a central purchasing department where it makes large purchases for purposes of its business. However, on occasion, employees in the field will need to purchase additional materials to complete a job. And in this case, they did so at stores like Home Depot and various other stores with a credit card. Appellant did not present a resale certificate for any of these credit card purchases. Respondent contends that appellant paid tax credit card purchases for Home Depot and other big box stores. So they conceded, yes, for these purchases, you paid tax, but just for Home Depot and other big box stores, but just simply asserted without any basis whatsoever that no tax was charged on credit card purchases made from smaller stores. There's no basis for this distinction. Appellant did not present any of the stores where it made credit card purchases here with a resale certificate. Appellant paid tax on those credit card purchases, and it is entitled to a credit for the tax it paid on those purchases for which it resold, including the small stores. Again, it's important to remember, respondent allowed sales to Home Depot. They agreed that tax was paid there, but it is I just don't understand what the basis would be for, oh, it's a small store, so you didn't, which it just doesn't make any sense. So the last issue is the interest abatement issue. And for this one, I'm going to ask Mr. Ramirez to jump in and explain the basis for this. I know I've touched on it, discussing how this audit has unfolded, how long it's taken, how many re-audits there are. Mr. Ramirez has been involved in this case since the beginning, and I'm going to hand it over to him now.
Judge Quee, this is Javier Ramirez with Senior LEWAC, representing Displayit. Yes, I've been involved with the audit since inception. Actually, not during the audit, but we came on board just shortly after the audit had closed, and we represented the client through the appeals process. So to add a little history to the Sprint issue, we have had multiple re-audits, and I know that the state's contention is that we continue to provide information and therefore they continue to re-audit. But that's a little bit disingenuous, because at inception, when we initially provided the XYZ letters to the State Board of Equalization at the time, now the CDTFA, the auditor basically confirmed and said, yes, we do believe that there are issues here, but we need you to provide us documentation to support the XYZ letter. The auditor at the time requested 1/4's worth of information. That's 1/4 of information to confirm that Sprint actually self-accrued use tax. Now, the state pulled 1/4 out of 2006. The Sprint was currently under audit during that time, and I'm kind of blending a couple of this interest abatement issue in addition to the Sprint issue, because I believe we need to add a little bit of light on the Sprint matter just a little bit more. We provided it over time. After providing the XYZ letter, the State Board of Equalization came back and noted, listen, we are not going to accept the XY letter. We believe there's issues with the issue. They couldn't tell us why. They wouldn't confirm as to why they wouldn't allow the XYZ letter to be confirmed. We went so in essence, we did comply with the state, and we provided them documentation in the support of use tax accruals from Sprint and Nextel during the audit period. It was outside of what the state had requested, but it was still valid information. So we did provide and shown that right up front that yes, in fact, that Sprint did in fact accrue use tax over the period that was in question. Now, at the first district hearing, we actually sat with the CDTFA, the supervisor and auditor, and they said exactly what Mr. Cataldo said, is that we have information that we can't disclose to you, but you got to trust us. This is information that we know, and we're going to disallow the XYZ letter that you provided. So after the first district hearing, it is our contention that we should have been allowed to present our case in front of the State Board of Equalization. But instead, there were audit adjustments that were required. So how long did that take to get those audit adjustments? I don't know, close to 2 years. We get scheduled for another district hearing as opposed to a hearing in front of the State Board of Equalization. So once again, we're getting prepared for the same issue. So we contact Sprint, we obtain additional documentation to support the position, and present it, same facts, same issues, just additional documentation to support it in the form of use tax accrual. So Sprint then offered us additional documentation, which we presented to the state. Once again, in front of at the hearing, the State Board of Equalization, now the CDTFA, asserted, well, we know something about this Sprint that we can't disclose, so we're going to disallow we're still going to disallow it. And once again, but they allowed us to present the information and send it back to re-audit again to account for those additional transactions. How long did that take? An additional 2 years. So once again, we get scheduled for a third district hearing, which I don't understand why we kept getting pushed to district hearing instead of being pushed straight to the State Board of Equalization. So once again, we present additional information related to Sprint to show even more support that, hey, look, we do have additional documentation to support additional transactions. It's very clear in the form of MSA. So we went and we took the MSAs from Sprint that they provided to our client Displayit, basically noting that do not charge us tax. We provided this to the State Board of Equalization, and we presented it at hearing. The MSAs were very clear. Do not charge us tax. We self-accrue it. This is an assertion directly from Sprint. And Sprint made these assertions, and we provided those assertions to the state. Once again, the state basically, same assertion. Listen, we know information. We know that the XYZ letters are questionable because there's information that you don't know. So once again, since we provided additional information to support the XYZ, that the XYZ should be allowed, guess what the state does? They send it right back to re-audit for another 2 years. Now we're 6-7 years down the road on the same exact issue. Makes absolutely no sense. We should have been given the opportunity, if the state was not going to allow and hold the position as tight as they're holding, to present the issue to the State Board of Equalization. But we were not afforded that opportunity because they kept sending it back for re-audit every single time we submitted additional information to support that use tax actually was accrued by Sprint. Now, in the fourth re-audit, Sprint actually provided us a ton of information. They gave us 1 complete years of accruals, all of 2005, above 25,000 and below 25,000. At this point, we got an auditor that actually knew what he was doing. And he actually went back and looked at the Sprint audit. And in the auditor's work papers and the auditor's notes, he notes that yes, they were audited, and in the audit, a projection was done. And in that projection, there were Displayit transactions. Therefore, in the percentage of error, we must have captured all of those transactions. And therefore, so they took out of our audit to avoid the double taxation that Michael Cataldo was just referencing. And they eliminated everything under 25,000. Above 25,000 for 2005, we actually provided the use tax accruals from Sprint to confirm that every single one of those transactions was accrued. They did not provide us with 2006. and the state auditor that actually made all the corrections, $3.7 million worth of adjustments in the fourth re-audit. The auditor basically made the note that, listen, we're not going to go back and track every single item transactions. We can't. It's too much. Right? We can't do that in the audit. It's either he didn't want to, he wasn't allowed to, I don't know, but he didn't go through the 25,000 and above on an individual basis to confirm that that the state had actually accrued those on Sprint's audit. Now, I look at this auditor, the fourth re-audit, and the work that we did with this auditor, and that should have been done in the first audit, in the first re-audit. That same thing that the fourth auditor looked at should have been looked at by the first auditor, and we wouldn't have had 4 separate re-audits. So yes, was the last re-audit more successful for our client? Absolutely. That's because the auditor took the time to go look at the Sprint audit without telling us, and he told us, he actually verbally told us, yes, I am looking at the Sprint audit, and yes, there are duplications in tax, and therefore I am going to remove this. So it took 4 re-audits, almost 11 years to get to the point where we had an auditor actually look at the Sprint audit and identify that there was double taxation issues and adjust everything from 9 million down to 1.7 million. Our contention with regards to this is that the XYZ letter that was issued initially was valid and it should have been accepted, and all Sprint transactions should have been covered under the XYZ letter. Having said that, we should have never gone to 11 years, close to 11 years worth of issues. This should have been heard within 2 to 3 years, and we should have had the opportunity to present it in front of the State Board of Equalization. And except we weren't afforded that opportunity because every time we presented new information regarding Sprint, it got sent right back to re-audit to adjust to those small adjustments, because there weren't large adjustments every time we presented. All we were doing was providing information to show that that Sprint actually self-accrued tax, and it was their policy to self-accrue tax. So 11 years, we believe, is way too long. We should have been given the opportunity within 3 years to present in front of the State Board of Equalization, and we were not.
This is Judge Gui. Thank you. Does that conclude Appellant's opening presentation?
This is Michael Cataldo. Yes, unless I think you're done, but I think we're done here.
If I could make one additional comment with regards to the tax paid purchases we sold, I would like to address additionally that we actually did go back through the auditor's work papers and every single pretty much all of the statements, the bank statements that the auditor looked at and referenced. And in the auditor's work papers, she noted that she provided and she gave the client and agreed that all the big box, she didn't just say Home Depot, she said Home Depot and big box transactions. After going through the actual invoices, the way the client actually broke out their statements is they actually physically went through and identified cost of goods sold items, actual tangible personal property that was purchased. And they broke them into 3 different buckets: tangible personal property, FedEx and intangibles, meals and entertainment, and services. So the auditor in her work papers denotes that a lot of the transactions were service-based, but that's not actually true. The transactions, because the client made the effort to go through and identify only taxable, tangible personal property that was purchased. So when they backed into the tax paid purchases resold credit, they took the amount of physical items purchased for jobs that they would do, and then they backed into the amount of tax that was measured that was available to them that they could take as a tax paid purchases resold credit. We looked at all those numbers, and we took a look at the big box, and the definition of big box by the auditor's contention was basically just Home Depot. She eliminated any other big store. So yeah, although she did give the Home Depot credit, she did not afford the other big box by definition. And I wanted to make additional note that Mr. Cataldo had mentioned. The resale certificate issues when a contractor or when one of their employees goes to a store to buy, they don't carry resale certificates. These are one-off transactions. So they take their credit card, they go into Home Depot or to one of these stores, and they basically issue it and purchase product. They purchase the product on site, just quick. So these transactions, they're all taxed. They're all within California, and they're all taxed. So there's no, and the auditor made the contention that, well, if we couldn't validate it, if we couldn't see an invoice showing that you actually paid sales tax, then it was deemed that the tax credit was not allowed. But these are one-off transactions. So the credit card statement is what they used, and these are just like small invoices. They're not through purchasing where you actually have the resale certificate and the seller's permit on the invoice. This is just an individual walking into a store and buying product. So to assert that they owe the XYZ letter, they must have issued resale certificates is just not reasonable. These transactions are one-off transactions where sales tax was paid over the counter by individuals who were employed by Displayit just to finish jobs, just to get materials to complete what they needed. Cost of goods sold items and they should be afforded the opportunity for tax-paid purchases resold. And then I'll conclude.
Okay, thank you. This is Judge Kui, and I did have a couple questions. I'm trying to think where to start. I'd like to start with the first issue of disallowed sales over $25,000 to retailers other than Sprint. And I believe Mr. Cataldo had mentioned that the appellant provided documentation to show that ES3 was required or did in fact resell the displays to Toyota. And I'm just wondering, because I think that was a fact of dispute with CDTFA, I was wondering, could you clarify which document in the record indicated that ES3 was reselling the backstage displays to Toyota?
Yeah, so what was attached as our exhibit, and I have to pull up the exhibit list, but it is the XYZ letter from ES3 coupled with the letter from the CFO of ES3 explaining what they do and what they did. And then attached to that letter is a copy of the resale, the multi-jurisdictional resale certificate that Toyota provided to ES3. So that is what our evidence is that ES3 resold to Toyota. Because why would they even have a multi-jurisdictional resale certificate from Toyota? They don't sell cars or car parts. So, and not to mention that their letter explains what they did.
Yeah, and if I can add some additional information to that. ES3 was working with Displayit and Toyota. This transaction was concurrent. It wasn't they sold it to ES3 who then held onto it, was contracted with Toyota. Our client knew that this product was going to Toyota through ES3. So it was they knew it was a stepped transaction. It was sold to ES3 who in turn was contracted with Toyota. But it was all concurrent. Everybody knew that the product was going to Toyota. So from our perspective, our client effectively knew that their initial step, their initial transaction to ES3 was an exempt transaction, a sales for resale, because they knew the next transaction after that was going to be a sale to Toyota.
Okay, and this is Judge Quinn. Just one quick question. The resale certificate, was that signed prior to the transactions at issue?
We received an XYZ letter from ES3 confirming this. So there was no resale certificate on file. So effectively, they went back and at the audit, they requested an XYZ letter from ES3, who then signed it and provided a letter. So they actually provided a letter. In addition, they provided the XYZ letter. They provided a letter from the CEO or CFO and the Toyota multi-jurisdictional resale certificate. So they provided 3 documents in support of the transaction, that it was an actual sales for resale.
This is Judge Queese. So to clarify, the multi-jurisdictional resale certificate was attached to the 2010 letter from ES3's CFO, is that correct?
That is correct. This is Javier. Yes, that's correct.
This is Michael Cataldo. It is at Appellant's Exhibit 6.
Okay, thank you. And one, well, more than one, but another clarification question. So for that first issue, the sales to ES3, I just wanted to clarify because I think you broke that down into two sub-issues. One was sales to ES3 with the XYZ letter / resale certificate. And the second sub-issue was trade show boots delivered to Las Vegas. And so, in looking at the multi-jurisdictional resale certificate, that's mentioning Scion backstage tour structures. And I'm just wondering, is the second sub-issue, the trade show boots delivered to Las Vegas, is that also sales to ES3, or are those sales to a different customer other than ES3?
That's a different customer. That's an unrelated sale. It's not related to ES3, the booth, the trade show booth sale.
Okay, thank you.
I believe we missed one issue. This is Javier, Judge Cui, and I believe we missed one issue for below 25,000, and that was the Bellis transactions, Michael. And if it's okay, can we please address that issue?
Yes, so just to clarify, this is Judge Cui, and just to clarify, you're talking about a different audit item, sales under $25,000?
Correct, sales under 25,000. And if it's okay, I'd like the opportunity to present that particular issue.
This is Judge Cui. Yes, please go ahead.
Okay, so there were three transactions that were noted for the transactions below 25,000 for Bellis. And those transactions were disallowed, I believe, primarily because the owner of Displayit also owned Bellis, and so the XYZ letter, they purchased product from Displayit with the intent to resell their product. So the State Board of Equal, an XYZ letter was issued, but was denied. Primarily because they believe that one, the entity did not carry a valid seller's permit at the time, and therefore it was that the XYZ letter was signed by the CFO of Displayit, who also owned the subsequent entity. And so it's our position that it doesn't matter whether or not that the entity didn't hold a valid California seller's permit. The intent was that they fully intended when they purchased from Displayit to resell their products to other individuals. And so the mere fact that the owner of Displayit signed it should not be relevant. It should be considered a valid transaction and a valid XYZ letter stating that the product was intended to be resold and in fact was resold.
This is Judge Cui. Was that the entirety of your additional issue with the sales under $25,000?
That is the only remaining issue that we had. Yes, sir.
Okay, this is Judge Cui. I'm just because this issue was listed as not an issue in the minutes and orders. I think CDTFA might not be prepared to address it, so I'm going to briefly turn to CDTFA to inquire if they would like additional time after the hearing to address this audit item, and to confirm if they are able to address it or not.
Your Honor, this is Christopher Brooks. It's a bit late to be raising the issue. I mean, we've been through the pre-hearing conference. We addressed what the issues were going to be at this hearing, at the beginning of the hearing. And now they've introduced a new issue. Yeah, we would certainly need more time, but we don't think we would suggest that the issue be not even being addressed. They already had an opportunity to raise it if they thought it was something important. But at the minimum, we would request time to prepare for that because we were not prepared for it.
This is Judge Cui, and I believe going into the appeal, they had raised this issue, and then CDTFA had addressed it, and based on that adjustments, they might have said it was not an issue, but I believe it was still something that was within the range of this appeal because it was in the opening brief. So I would allow them to continue raising this issue, especially considering the additional adjustments that have gone back and forth during the course of the appeal before OTA. So I believe it would be fair just to allow CDTFA time after the hearing to address this issue. And I'm going to ask if 30 days would be sufficient, or if not, how much time CDTFA would like to address this audit item.
Judge Creed, this is Mary Flor Jimenez. We will need at least 30 days to address that issue.
Okay, so, and appellant, are you okay with holding the record open in order to allow CDTFA 30 days to address the sales under $25,000?
Yes, we're fine with that. This is Michael Cataldo. We're fine with that.
Okay, so when this hearing concludes, and I realize CDTFA hasn't had their opening presentation yet, but when the hearing concludes, I will hold the record open and CDTFA will be afforded time to address this issue. But in the meantime, I'd like to get back to the questioning of the other issues. So I did have a couple of questions remaining, and I believe my panel members also have some questions they would like to ask. So I'm going to move on to the issue 2, sales to Sprint over $25,000. So in looking at the materials, my understanding was that, so the taxpayer had mentioned the disallowed XYZ letters, but my understanding was that the reason that CDTFA had disallowed them was because it had determined that appellant was acting as a construction contractor. And on that basis, they couldn't have legally been allowed to resell the materials to Sprint in absent while they were acting as a construction contractor under Regulation 1521. I believe that was my understanding of the issue, and I realize to the extent Sprint did pay use tax, there would be a deduction or offset allowable. I'm not sure if that's included in issue 3, taxpayer purchases resold deduction, but I'm just wondering if the appellant could, if they're disputing that the appellant was acting as a construction contractor, or if they're disputing the element that their customer, that appellant wasn't legally allowed to resell it just because they were acting as a construction contractor and regarded as the consumer and retailer for their fixtures and materials. I'm wondering if the appellant would like to address that aspect.
So this is Javier Ramirez. We issued multiple XYZ letters. Although Displayit did have some, like very few construction contracts. I mean, their primary sale is the sale of tangible personal property, displays to Sprint. All displays to Sprint were, none of them were deemed construction contracts, with the exception of maybe a handful, like a very small amount. And we're talking about thousands and thousands of transactions. And these are they're booths that go into like a Verizon store or into a regular store. They're not the kind of booths that are deemed construction contracts. The XYZ letters that were provided, we provided for all transactions through 2005, all the way through 2007, until Sprint became and opened up a procurement company and a resale certificate was issued. At the time that they became a procurement company, the resale certificate became valid and all transactions were exempt from taxation as accepted and accepted by the State Board of Equalization, now CDTFA. So there was never, I don't believe, and that's the first time I actually heard that the state's contention was that they're a construction contractor and not the XYZ letters were not deemed valid because they're a construction contractor. They're not a primary contractor. They are a seller of tangible personal property. And all transactions that were primarily sold, not all, but like 98% of all displays sold to Sprint were the sale of tangible personal property and subject to the XYZ letters that we provided. And Sprint issued XYZ letters checking the box that the items were purchased, and items purchased we self-accrued use tax on. So no, I don't believe that's a valid argument.
Okay, this is Judge Queen. I mean, I don't want to state CDTFA's argument for them. So when they have the opening presentation, on questioning, I'll ask them to clarify their argument on this issue. And I would like to move to the tax paid purchases resold aspect. And so my understanding was that the amount allowed was based on an examination of purchase invoices. And during your presentation, you indicated that there was some issue about the allowed sales tax on big box retailers like Home Depot, but not on mom and pop sales. And I just wanted to get some clarification on that. So are you saying that the purchase invoices, they didn't include the amount of tax that was charged? I'm just wondering why it wouldn't have known from an examination of the purchase invoices which transactions were taxed and which weren't.
So the auditor, this is Javier Ramirez responding. The auditor evaluated the American Express statements. So under the American Express statements, because the client, that's how the tax paid purchases resold credit were only for transactions that were purchased outside or on site, as opposed to through their purchasing department. So the auditor basically looked at the statements and went through the statements to identify which what kind of transactions were actually being purchased. Attached to the statements, there were some receipts, but for the most part, when you're buying at a mom and pop store, it's not like the individuals buying at mom and pop stores are actually saving the receipts. A lot of the receipts were lost or filed away somewhere in a box. But like I said, they're one-off receipts, so it's not like they probably tucked away into miscellaneous. They didn't go to like their normal purchasing. So the auditor made the assumption that, and actually I shouldn't say that the auditor made the assumption because I don't know what her assumptions were, but what she did was she basically disallowed them and noted that it's assumed that they didn't, if she couldn't verify that sales tax was paid, then she was going to disallow them, which she did. Except for the Home Depots and the big box retailers where it's clear they had where they continued to operate, and Home Depot had a lot of invoices, so it was easy to determine that they actually paid sales tax on these transactions because a lot of them were attached because they did it in big form because they bought from the construction portion of Home Depot. So I hope that answers your question. So did I answer your question? Hopefully.
This is just yes, that does answer the question. Thank you. And this, I believe, will be my last question, but I think there was some overlap because you were mentioning that appellant would make the purchases and pay tax, for example, to the Home Depot or the mom and pop. But then I'm wondering, does that also overlap with their Sprint sales issue? Because for the Sprint sales issue 2, I believe the argument was that appellant was reselling them. So so you're saying that tax wasn't applicable, but then you're also saying that you paid tax at the time of purchase. So you're claiming a taxpayer purchase resold deduction and claiming. So I guess that makes sense. Okay.
Once again, this is Javier responding. The Sprint issue is a very separate and distinct issue. The Sprint issue is an issue of taxability between Displayit and Sprint on the displays that they purchased and sold to Sprint. And the Sprint had a policy of self-accruing use tax. So all of their MSAs and all of their transactions were no tax was included because Sprint made the assertion that they were the responsible party to Displayit through their MSAs and through their documentation, through their POs, through all of their invoices and all their documentation basically stated that they were not to be charged tax because they self-accrued it. And so the tax paid purchases resold credit is very different. That's California transactions. If they were working on a particular client, let's just say in Santa Ana or in Los Angeles, and they didn't have, and they were installing and they didn't have enough materials, then they would run to Home Depot, buy those materials that they needed to install, and then come back to that job. And so this is separate and distinct from the Sprint transactions. These are pretty much everything outside of that, California-based transactions primarily. There were transactions out of state. So there were transactions where they purchased, where they did a job in a different jurisdiction. and they actually went to those stores outside of California. And there's no question that those transactions would be deemed taxable in that state, but not in California.
This is Judge Kui. Okay, thank you. So you're not contending that you paid appellant paid tax at the time of purchasing the booths that were sold to Sprint, and that's entirely different from issue 3.
That's what we're stating. It's a completely separate issue.
Okay, this is Judge Kui. Thank you. And I believe that answered the questions that I had at this time. I'm going to turn it over to my co-panelists. I'll start with Judge Long. Judge Long, do you have any questions for the taxpayer?
This is Judge Long. I have a couple of questions regarding Exhibit 6, the September 12th, 2010 letter from ES3's CFO. Just to clarify, the letter states that they acted as a conduit engaging Displayit through Toyota. Is there any information in the record regarding who paid Displayit for the displays, for the deliverables, and whether the deliverables were sent to ES3 or delivered directly to Toyota?
This is Javier responding. ES3 paid Displayit. I do not know whether or not it was drop shipped directly to Toyota or if it was directly shipped to ES3. But they were paid by ES3.
Okay, and then regarding the length of time of the audit, the 10 plus years, and the interest abatement request, I just wanted to clarify for each re-audit, the first 4 re-audits, there's no dispute that additional information was provided, or at least additional detailed information was provided before each re-audit. Is that correct?
So once again, this is Javier responding. The information that was the additional information that was provided was simply additional documentation from Sprint noting that they self-accrued use tax. So no additional issues were addressed in these re-audits regarding the above 25 that were excluding Sprint or below 25,000. It was just primarily the Sprint issue. And so every time we submitted information to support the position, it seemed to end up in another re-audit to account for those transactions that we provided. And they were large transactions. Granted, we would provide a additional quarter of use tax accruals that could have been close to $1 million in transactions, or as little as $50,000 in transactions. And the state basically said, okay, we'll make those corrections, send it back to re-audit so that we can account for those transactions, which they did. But it wasn't a different issue. It was the same basic issue, arguing that the XYZ letter initially provided by Sprint should have been accepted since they were in the business of self-accruing use tax.
Okay, thank you. No more questions from me.
This is Judge Kui. I'm going to turn it over now to Judge Aldrich for questions.
This is Judge Aldrich. I don't have any questions at this time.
Okay, this is Judge Kui. I'm going to then at this point allow CDTFA to make their opening presentation. You have 20 minutes. You may proceed.
Thank you, Judge Kui. This is Mary Flor Jimenez. Appellant is a retailer and sometimes a construction contractor of displays, trade show booths, and storefronts. It has a start date of April 1st, 1998. Department audited the business for the period of July 1st, 2005 through June 30th, 2008. There are 7 audit items with a total audit findings of $7,586,000. I'll be covering the 4 items that are still in dispute. The department examined non-taxable sales of $25,000 or more on an actual basis. Sales which could not be supported by valid Resale cards or XYZ letters were disallowed. Audit item 1 is the examinations of sales over $25,000 to customers rather than Sprint companies. In February 2007, appellant sold to ES3 Inc. what the invoices refer to as Scion backstage tour structures, and additions like graphics, signs, and banners for around $590,000. The appellant has not provided a timely resale certificate taken from ES3. Instead, ES3 XYZ's response was provided. The reply consists of a completed XYZ form stating that ES3 purchased the tangible personal property for resale to Toyota Motor Sales. There's also a letter from the Chief Financial Officer of ES3 stating that Toyota engaged ES3 to implement a national training program for 2 new car models. ES3 purchased the property from appellant without paying sales tax reimbursement in reliance on Toyota's resale certificate. And also provided is a 1-page copy of Toyota's resale certificate. And this will be on your Exhibit F, page 677. So ES3 does not have a seller's permit, and there is no evidence their customer, Toyota, resold the event displays or accrued tax on the cost of those displays. So California imposes sales tax on the gross receipt from retail sales of tangible property in the state. Gross receipts are presumed to be taxable unless proven otherwise. Regulation 1668, subdivision A, explains that the burden of proving that a sale of tangible personal property is not at retail is upon the seller, unless the seller timely takes in good faith a certificate from the purchaser that the property is purchased for resale. Now, in this case, appellant is unable to produce a timely, valid resale certificate. So one of the methods that we recognize to assist a retailer in satisfying its burden of proving that the sales are for resale is the use of XYZ letters. These letters are sent in a form approved by the department to purchaser inquiring as to the disposition of the property purchase. Response to the XYZ letter is not, however, equivalent to a timely and valid resale certificate received in good faith. And that's Regulation 1668. The department is not required to relieve a seller from liability of sales tax or use tax collection based on a response to an XYZ letter. The department may, in its discretion, verify the information provided in the response of the XYZ letter to determine whether the purchase was for resale or for own use, or whether the tax was paid by the purchaser. Now, appellant has not provided a valid resale certificate, timely taken in good faith from ES3. Therefore, the sales to ES3 are presumed to be taxable retail sales unless appellant proves that the sales were for resale. The invoices document sales to ES3, not to Toyota. ES3's letter does not state that it resold the property to Toyota. And that's on your Exhibit F, page 676. It mentioned that ES3 acted as a conduit between appellant and Toyota. Appellant relied on what ES3 described as Toyota's blanket exemption form. If you look at the lower portion of that certificate on Exhibit F, page 677, you'll see that its application depends on the content of an associated purchase order. However, we haven't seen a copy of a Toyota's purchase order that refers to this specific sale. If you look at the top portion that says issued to seller information and the address and even the date, they're all missing from this certificate. So appellant has not presented evidence of the claim transaction between ES3 and Toyota So we have no way to independently verify a resale by ES3 to Toyota. Now, the 4 disallowed sales for resale involve the sale of Scion backstage tour structures and graphics. When we did the research, it indicates that during year 2007, an event named Scion Backstage Tour Driving Event was held. So included with that event was a contest produced and administered by ES3 and sponsored by Scion Toyota. And that would be on your Exhibit I, page 784. So based on that sales invoices description and the amounts involved, the department concludes the item purchased were large display structures and graphics used at the events. These structures are not something that Toyota would normally resell. Therefore, these structures are subject to tax. The appellant representative mentioned a trade show booth sale in Las Vegas as part of this audit item, but I didn't hear the appellant mentioning the name or the invoice number, so I can't address that contention. But I will go on to the other sales over $25,000 sales to Sprint here. So audit item 2 is disallowed exempt sales to Sprint Nextel over $25,000, which were examined on an actual basis for the audit period. The remaining audit issue in contention are for transactions in 2006. Now, there were no tax charge or reported, and we find no evidence that Sprint Nextel self-report the tax due on those sales. During the audit, appellant provided several XYZ letter responses. 2 of them were from Nextel System Corporation, NSC. NSC asserted that many of the transactions were sales for resales to other Sprint companies. The department accepted the sales to NSC as sales for resales. Another XYZ response is from Nextel of California, and that's NCI. NCI asserted that the sales were for NCI's use. However, NCI paid use tax with tax returns filed. So many of these transactions were removed from the calculation. Now, on June 21st, 2017, appellant has also provided the MSA between Nextel and appellant dated July 18, 2005, and Nextel's sales and use tax return for 3rd quarter 2006 and 4th quarter 2006, and an Excel data file that includes details of Nextel's accrual of use tax for these 2 quarters. So based on the MSA, appellant asserts that if it did not charge tax on its invoice to Nextel, Nextel has specifically agreed to be responsible and remit the tax. Now, the contractual shifting of tax liabilities between private parties does not change the retailer's sales tax obligation, and that's Pacific Coast Engineering Company versus State of California. The existence and terms of the MSA are insufficient to establish that Nextel actually self-reported the applicable use tax for this time period. Without evidence that Nextel, in fact, self-reported use tax on these 2006 purchases from appellant, the department finds that the MSA provides no basis on which to reduce the measure of tax. Now, as far as Nextel sales and use tax return for 3rd quarter and 4th quarter 2006, the information establishes that Nextel self-reported use tax on some of the disputed transaction. The department made this adjustment on an actual basis. The reductions were not projected because appellant did not provide Nextel use tax data from the largest 2 quarters for which the department requested information from. Instead, appellant selected 2 different quarters. In addition, the data from these 2 quarters was missing many of the disallowed transactions, including the largest individual sale of $918,750. Therefore, the department has no confidence that Nextel accrued tax on transaction in question. Since the claim regarding the accrual and payment of tax directly to the CDTFA can't be verified, the department declines to reduce additional measure of tax for this audit item. Now I'll address audit item 5, which is the disallowed claim tax paid purchases resold. Now, the amounts claimed as tax paid purchases resold prior to use were examined. So instead of reporting the actual amounts, the appellant estimated the purchases resold totals by summarizing all credit card purchases and dividing it by 1.0775% to exclude the tax from the amounts. So when we perform a test of the 2007 credit card billing statements and reviewed all available corresponding purchase invoices, not all purchases invoices were available. The department noted that many of the purchases were for services and not for tangible personal property. Therefore, these acquisitions were disallowed. However, the department allowed all purchases from Home Depot and other large chain retailers with the presumption that tax was charged on all items purchased. As far as other acquisition, if supporting sales invoices with proof of sales tax were not made available, the department disallowed them. A percentage of error was calculated, and this error rate is then applied to the claim amounts to arrive at the disallowed tax paid purchase resold of around $1,506,000 for the audit period. And that will be on your Exhibit B, page 451. Now, the audit issue here is not the disallowance of claim exemption. The audit issue here is the disallowance of claim exemption for tax paid purchases of items which were later resold by the appellant. Here, the appellant claimed tax credit on items that they did not pay tax on. The determination of who is or who isn't responsible for the payment of tax on these purchases is not the issue. The dispute involves whether the appellant is entitled to a deduction for sales taxes paid on goods that they ultimately resold. With this contention, the appellant submitted a list, which also is part of this exhibit. I believe that's on their page 37. If you look at the title of the heading, it says listing of California vendors that did not charge Displayit tax for sales of tangible personal property. It says not charge. This information just supports the department's analysis that most of the appellant's credit card purchases do not include sales tax. Therefore, no adjustment to the disallowed claim tax purchase amount is warranted. Now, item 6 is abatement of interest. I know the appellant is claiming that during the past 10 years, the department has subjected the appellant to multiple examination with nominal changes despite submission of documentation. The appellant claims the department has unreasonably delayed the appeal of this case due to the excessive nature of our review. Now, Revenue and Taxation Code, Section 6593.5 allows for relief of all or any part of the interest imposed due to unreasonable error or delay by the employee of the department acting in their official capacity. So when we perform an analysis of this case and the specific time spent during the audit process, the settlement and appeals process, no errors or delays by the department were noted. On several occasions during the appeals process, the appellant provided new information and documentation which was not previously presented. Because of this, the department has issued multiple decisions, plus 4 re-audits have been performed. In each case, a detailed explanation of allowable adjustment was provided by the department. There is no evidence of unreasonable errors or delays by the department during the appeals process. Rather, the department has attempted to resolve all issues as efficiently as possible. So in reviewing this case for preparation for this hearing, I noticed that the appellant's representatives were the one that requested multiple delays and postponements during the audit and appeals process. If you take a look at the 414Z, which is the assignment activity history, the audit started on October 2nd, 2008, with the auditor meeting with the appellant's CPA. From November 21st, 2008 through June 30th, 2009, there was a gap in time where the CPA was busy with tax season and vacation. And that will be on your Exhibit B, page 320. After that delay, the auditor continued to work with that CPA. On August 31st, 2009, almost a year after the audit started, the appellant was still organizing shipping documents for other customers besides Sprint. You'll see that on your Exhibit B, page 322. Now, the current representative replaced the previous CPA in October 2009. Immediately after this change, the new representative had to postpone several appointments because of family and personal illness in October and November 2009. Then in January, April, and May 2010, several meetings were rescheduled by the representative as well. The contact dates and detailed entries are on your Exhibit B, page 327. On your page 329, on August 11, 2010, the department posted a notation, and I'll quote this. The auditor explained that the completion of this examination has been delayed due to taxpayers' numerous requests for additional time. In addition, per auditor, the taxpayers' representatives have a tendency to provide fragmented or incomplete documentation for our review. The taxpayer's representative had been given a deadline in writing through our deadline date of July 12, 2010. The auditor has given numerous other verbal and email warnings to the taxpayer's representatives beyond deadline date of July 28, 2010, which has already came and passed. On October 15, 2013, the appeals conference was held, and that will be on your Exhibit F, page 663. Appellants submitted documentation, and appeals allowed their representative 2 additional weeks to provide more documentation. Even after the appeals conference, multiple extensions were requested between October 2013 through January 2014. The decision or recommendation, DNR, was issued on May 12, 2014, and the case was returned to the field office for adjustments. And that will be on your Exhibit F, page 674. On July 20th, 2014, the department filed a request for reconsideration, and that's on your Exhibit H, page 768. There was no response from the appellant's representative. So, the supplemental decision and recommendation, SDNR, was issued on November 10, 2014, recommending additional adjustments. Exhibit G, page 696. On February 4, 2015, the auditor once again worked with a representative, as you will see on Exhibit B, page 585. However, because of the representative's family health issues, additional time was again requested. If you look at Exhibit B, page 586, specifically May 1st and May 8, 2015, the representative is unable to provide documentation because the new attorney that is supposed to be working on this case has not had time to prepare the additional documents. On October 19, 2015, the representative requests a board hearing. Now, on December 4, 2015, a notice of the board hearing scheduled for February 24, 2016 was sent. Appellant's representative asked a postponement for that board hearing. A new hearing was immediately scheduled for April 27, 2016. However, 9 days before the new board hearing, the case was pulled and deferred for settlement review. On June 21st, 2017, while in settlement, representative filed a late request for reconsideration, RFR, to the SDNR that was issued on November 10, 2014, which is almost 3 years later. This is to submit additional documentation from Nextel to show that this customer accrued and reported use tax on the disputed transaction. And this will be on your Exhibit H, page 705. The third re-audit was done to follow the SDNR recommendation and was completed on September 22nd, 2017. Exhibit H, page 583. On December 29, 2017, this case was forwarded to OTA, and on February 25th, 2019, settlement closed the case because they could not reach an agreement. Now, even as late as June 6, 2019, when this case was already with OTA, appellant's representative stated that he did not have additional information to submit, but he still believes that more adjustments are warranted and more documentation would be provided. And this will be on your Exhibit B, page 17. We find that the appellant's claim that the department has unreasonably delayed the appeal of this case has no basis. We conclude that no interest relief is warranted. Appellant has not provided documentation or essential information to support any additional adjustment to the audit findings. Also, we find no evidence of unreasonable errors or delay by the department during the appeals process. It's the appellant's representative that requested numerous delays and postponements. Therefore, we request the appellant's appeal be denied. This concludes my presentation. Thank you. I'm available to answer questions you may have.
This is Judge Cui. Thank you, Ms. Jimenez. I guess I'll start with one question. So you had indicated that CDTFA was unable to, and just a reminder to please mute your mic if you're not speaking at this time. So just to go back, you had mentioned on issue 1, sales over $25,000 to customers other than Sprint, that CDTFA was unable to address the second sub-issue, which was trade show booth sales in Las Vegas to customers other than ES3. And that was because the taxpayer hadn't identified the customer or customers which were impacted. So this is what I'm thinking, since we're holding the record open to allow CDTFA to respond anyway to the other issue, I was thinking first I would allow appellant time to specify in writing what the concerns were with 1, the sales that I just noted to Las Vegas, and 2, the issue with sales under $25,000, which was raised as a new issue during the hearing. So the appellant would be given time to specify in writing what its specific concerns were with those 2 items. And then after that, CDTFA would be given an opportunity to specify its response to those new concerns that were raised during the hearing. And I would just like to get input from the parties to determine if that's something that they would be agreeable to, or if they would, or what their feelings are about that. I'll start with CDTFA. What are your thoughts about that?
Judge Cui, as far as the transaction over $25,000, other than Sprint, I'm prepared to respond to any of those sales. I just need a specific information more than that Las Vegas booth.
Oh, this is Judge Kui. Okay, thank you. With that said, then I will turn it over to appellant representative. Appellant, I believe CDTFA is able to address your contention with respect to the Las Vegas booth, but I believe they just had indicated that they need to know what customer that you were referring to in order to address it. Are you able to do that at this time?
This is Javier Ramirez responding. The over 25,000 item that's in question that had to deal with the Las Vegas trade booth is the first item, item number 1 of the auditor's report under 12A1 with the client name of Art Impressions, trade show booth for Magic 2007.
This is Judge Kui, and would CDTFA like a short recess so that they can review their notes and present a response on that? And also, is this enough for you to be able to respond this time?
Judge Kui, this is Mary Flor Jimenez. I can actually address that particular sales transaction right now.
This is Judge Kui. Go ahead, please.
Yes, this is Mary Flor Jimenez. So appellant claims that one sale for a trade show booth in Las Vegas considered title transfer out of state for $25,663, I believe, and that should be removed. This sale to Art Impression Licensing is on your Exhibit B, page 95, and it's a sale to a known California customer located in Calabasas, California. So looks like appellant sold a trade show booth to this known California customer and shipped this compartment to Las Vegas for the 2007 Magic Trade Show, which is like a 5-day event. And no resale card or other exemption documentation was presented to support the exempt status of the sale. If you, I want to address Regulation 1620B3, which is purchase for use in the state. So property delivered outside of California to a purchaser known by the retailer to be a resident of California is regarded as having been purchased for use in the state unless a statement in writing signed by the purchaser that the property was purchased for use at a designated points or points outside the state is retained by the vendor. So without documentation, the department recommends no adjustments. And that concludes my presentation for that particular transaction.
This is Judge Kui. Thank you for that. And I did have another question on issue 2, the sales to the Sprint over $25,000. And I believe during CDTFA's presentation, they were addressing language in the MSA that contractually shifted the burden of the tax or who would be liable for the tax as between the parties. And you were saying that that wasn't sufficient because it doesn't change who the law imposes the tax on. But in listening to appellant's argument, I understand that their argument was that they had received X, Y, and Z letters to prove or to establish that these were sales for resale and backed. So I'm wondering, it seems like you are the parties are talking about 2 different aspects, and I'm wondering if you could address this.
Right. So we did receive XYZ letter from specifically Nextel of California, which is NCI, and they did say it's for their own use. The auditor tried calling, but they never responded, and that's why we requested additional information. And that's where the appellant provided the 3rd quarter 2006 and 4th quarter 2006 information. And but once again, when we look at that information, there are missing transactions, which includes that almost $1 million sale. Now, the total assessment that we have for this particular issue is about 1.7 million. So we're missing half. Okay. We can't.
Sorry, I was muted. So I just wanted to quickly clarify then. So CDTFA, you're saying that you already allowed some transactions to the extent that the appellant was able to provide proof that Nextel, NCI, self-reported use tax, and the remaining amount at issue is the 1.7 million that has to do with transactions which were not documented as use tax accruing and not otherwise indicated on the XYZ letters, or are there transactions that were indicated on the XYZ letters but you did not accept them because you weren't able to contact the person who signed the resale, the XYZ letter?
Judge Cree, my understanding is we tried to contact them to ask specifically for those transactions, and then when we have our sales that we disallowed, we trace them to the information that was provided third quarter 2006 and fourth quarter 2006. Some of the transactions were there, we allowed them, but the ones that were not, we disallowed.
Okay, this is Judge Cree. Thank you. And I believe I'll turn it over to the panel at this time to see if the panel members would like to ask any questions. Judge Long, do you have any questions to ask?
No questions at this time.
Judge Aldrich, would you like to ask any questions?
No questions at this time. Thank you.
Okay, this is Judge Kui. So I believe we're ready to move on to closing presentations. Appellant, to the extent I ask questions of CDTFA, you're welcome to address anything that might have come up in your closing presentation. So I'll turn it over to appellant's representatives for their closing presentation. You may proceed.
Thank you. Michael Cataldo for appellant. Just to reply to some of CDTFA's comments. So on the one that we were just talking about the known California customer, and again, I'd like to reiterate what we said in our the beginning of our argument. It is not incumbent upon taxpayers to investigate what happens 3 months after they make a sale just because some company has a location in the state. I mean, they're describing it a known California customer like that's like some sort of evil. This customer could be all over. It's not practical for someone to be following sales which were delivered into Nevada. This is a very important thing that's just kind of glossed over. These were delivered to Nevada. They were used at a trade show in Nevada. So it's specious for California to say, hey, we're going to tax that, even though it was delivered in Nevada and used in Nevada. Also, I just would like to respond to kind of the laundry list items of delays that are attributed to appellant in this matter throughout the audit. I mean, we're talking about over 10 years, so it would not be very difficult for me to just pick out a few items here. Hey, we need an extension for this. We need some time for this. This time is minuscule in comparison to the overall time the entire audit took. These are just little tiny things. So the representative had a health concern back in 2010, 2011. We're in 2020 right now, and we are here now, just today. So I don't think that supports the extensive delay in this matter. And I'd like to finish, and I'd also like to permit Mr. Ramirez to add anything that he'd like to say, but I'd like to finish with kind of what I started with, which is it is not proper for the CDTFA to be playing both sides of the fence with regard to this Sprint issue. And in my view, this is the issue that has really caused this thing to drag on for so long. They've audited Sprint. Sprint has paid use tax. They paid use tax on the exact same transactions which are at issue here. So they shouldn't be going after us and Sprint at the same time. So Mr. Ramirez, I'd like to hand it over to you if you have anything to add.
Yeah, and thank you. This is Javier Ramirez. to address the whole idea behind Sprint and the transactions and the XYZ letters, a comment was made that it's Nextel and that they tried to reach out to Sprint and tried to comment and try to get feedback. They actually did speak to Sprint. Sprint actually did have a conversation with the auditor and at the State Board of Equalization. So there was communication, and it was disclosed to the State Board of Equalization, now the CDTFA, that yes, in fact, they did self-accrue tax. The issue there has always been the same, that they were being audited, and they didn't, during the time that Sprint was being audited, the state did not want to confirm that they knew that there were issues on Sprint. They wouldn't notify us. This was brought up in the district hearings as well. So, and we're talking, and there were multiple XYZ letters issued for Nextel, for Boost, and for Sprint. There were 3 different companies. Of course, Sprint purchased Nextel, and at the time that they purchased Nextel, the XYZ letters then came out under Sprint. The remaining $1.7 million of use tax that's remaining, I know that Ms. Jimenez said that it's about 50%, making it sound that it's really large amount. You're talking about $9 to close to $10 million worth of transactions plus worth of Sprint transactions during this entire audit period, of which $1.7 million for 2006 was in question. Everything else was quantified. Resale certificate, not resale certificates, XYZ letters, use tax accruals, and shown that they actually accrued it, and an auditor from the CDTFA confirming that the Sprint transactions that Displayit transactions were actually included in the Sprint audit. So I know that they're trying to get around that, but as Mr. Cataldo just mentioned, they're trying to get both sides of the pie here. They want to say that, oh yeah, yes, we're going to give you some because it was part of a projection, but we're going to hit you with the ones that were actual based. Either way, Sprint was audited, and the auditor who audited Sprint picked up Displayit transactions in total. And now they're coming back and disallowing the XYZ letter and saying that, oh, well, it's taxable to you as well. There's a clear double taxation issue here. And that's all I have to comment on that.
This is Judge Kui. I'm going to turn it over to Mayor Floor or to the CDTFA's representative for their final presentation or for their final closing remarks.
Thank you, Judge Kui. This is Mary Flor Jimenez. The appellant's customer ES3 Inc. does not have a seller's permit. The documentation presented includes a letter and a copy of the resale card from Toyota. The resale certificate from Toyota is incomplete, and the items purchased are not those usually resold by Toyota. Also, the application of this resale certificate depends on the content of an associated purchase order. Appellant did not provide this purchase order from Toyota. The audit issue with Sprint and Nextel sales over $25,000 is for the year 2006. Appellant has failed to provide documents to support tax was charged or reported, or that the customer self-report the tax due. In regards to the disallowed claim tax paid purchase resold, the appellant estimated the tax paid purchases resold claim amounts by summarizing all credit card purchases. And as I mentioned, many of the purchases were for services and not for tangible personal property. The appellant failed to provide detailed proof that the property resold were tax paid. When it comes to the abatement of interest, our exhibit shows that it was the appellant's representative that requested multiple delays and postponements. The representative also offered fragmented documentation. During the appeals process, new information and documentation were provided, which was not previously presented. As a result, the department has issued multiple decisions and performed 4 re-audits. We find no evidence of unreasonable errors or delays by the department during the audit and the appeals process. Appellant failed to establish a basis for interest relief. The department's audit findings and actions are reasonable and fair. Therefore, the department requests the appellant's appeal be denied. Thank you.
Okay, thank you. At this point, I'm going to check with the panel members to see if they would like to ask any further questions before we conclude today's hearing. Judge Long, are you ready to conclude?
This is Judge Long. I have no questions. Thank you.
Okay, thank you. And Judge Aldrich, are you ready to conclude these proceedings?
I'm ready to conclude. Thank you.
Okay, so just to summarize quickly, CDTFA, we discussed that CDTFA would have an opportunity to address the new issue that was raised at the hearing, and that was sales under the audit item for sales under $25,000. CDTFA, I believe you were okay with 30 days. Is that sufficient for your CDTFA to respond to that issue?
Judge Creed, this is Mary Flor Jimenez. That's perfect.
Okay, great. So we're ready to conclude then, and the record will be held open for 30 days. CDTFA will send out a order following today's hearing to remind the parties of the due date to, to remind CDTFA of the due date to respond to the new issue that was raised in the appeal. Should be approximately September 30th, 2020. And thank you everyone for coming in today. So the judges are going to meet and decide your case after the record is closed. So after September 20th, approximately 100 days later, you can expect to receive a decision from us. And we're ready to adjourn now. Thank you.
Thank you.
Record is now closed.
Thank you.
The case is now closed for today. Thank you. Bye.
Thank you, Your Honor.